Hi, this is Ariella Carmel at Calcalist Mind the Tech conference in New York. I'm joined by Ori Kaufman Gafter, the head of international and tech banking at Valley National Bank. Thank you for joining me.
Thank you for having me. Hi, Ariella. Nice to meet you.
Nice to meet you. So can you tell me a little bit about your role at Valley National Bank and your activities?
Sure. I'm heading the international and technology banking for Valley National Bank. I joined the bank through the acquisition, the merger of Bank Leumi USA into Valley about 2 years ago. And basically my teams are covering 2 industries and 3 geographies. So I have teams in Israel, in Tel Aviv, teams in Palo Alto, covering the West Coast, and teams in New York, covering 2 different business lines. The one is the tech, which is very much connected to this conference here. We have teams dedicated to Israeli-related tech, working with early-stage companies throughout their journey, all the way to mature companies, as well as teams that are specified in working with VCs. And we have non-Israeli tech teams, mostly in New York, focusing on fund banking. Additionally, we have teams that are not focused on tech at all. They are working with what we call CNI, commercial and industrial business line, usually Israeli companies with banking needs in the US, and we have a diversity of teams and expertise in those teams, serving those companies' needs for lending and for depository.
Interesting. Now, would you mind describing a bit about some of the recent changes and developments that have been going on within the tech banking sector in the last year?
Yes, sure. So that has been quite a year. A lot of turbulence in the ecosystem for banking and for tech banks. Started in March, and everyone already knows the very quick run on the bank that has led to the failure of SVB. Following a liquidity crisis, obviously fueled by social media and a lot of panic, and this has started a snowball that eventually led to the failure of 2 additional banks, Signature Bank and First Republic. All 3 banks were focused on the tech industry. Now that has led to several steps by the regulators. The first one were immediate steps that were basically, they came into play in order to stop this snowball and make sure that there is no wider effect on the banking and the economy in general. These were immediate steps that actually, for me as an Israeli that's been in the US for 10 years, and this is the first time I've experienced this sort of thing, it was very reassuring to see how fast the regulators were able to stop this from happening, and of course for accelerating. The second steps were actually steps for the longer term, and this is the way that the regulators view tech banking today. One implication that I can mention is lending to tech companies. The OCC, which is one of the US regulators, has changed the entire guidelines as to working and funding pre-profit and investor-dependent companies. So these are effects that we're still, of course, seeing today, and we have yet to discover all the longer-term effects. I do have to say, from my standpoint as Valley Bank, I was always making fun of, like, we're not a sexy bank. And this was the first time that I realized that not being a sexy bank and having a lot of industries, a lot of diversification, commercial and industrial, real estate, healthcare, retail, is actually a strong part of the bank. Our tech portfolio was less than 2% at the time of those failures, and we were actually, although we were, of course, not pleased at all with the turbulence in the industry, we were there for our clients, and we were able to support them in that time because of the strength of the bank, because of the diversification of the bank.
And what about the changing behavior of founders within the tech banking sector? What have you noticed there?
Yeah, we definitely see that. In the past, we saw founders, they raised money and they were focused on the product. They went to the few banks that were like the usual suspects for tech companies, and that's it for them. They usually had like an external CFO that managed their things. They were not involved at all. Today, we are seeing that change of behavior. They are much more in the details. They are aware of the regulatory, like how much of my funds are secured in one bank. They are aware of who are the right partners for them. They are aware of how the trends, how the economic trends, the macroeconomic trends can affect their scenarios as for the growth of the company. And I think this is a good change for the industry as a whole. I think that a lot of things that are happening on the macro, the interest rates, the inflations, at the end of the day, they are affecting the company's ecosystem, their ability to raise money and their growth. We were hosting a Zoom event for Israeli founders a few weeks ago, and we had a chief economist, a tier one economist, a U.S. economist. It was 5:30 p.m. in Israel, and we had about 100 people on the line. They just asked on and on, went on and on with questions just because they were so interested on how all those trends are affecting their business.
Okay, interesting. Now, can you speak a bit to the significance of the Israeli market to Valley National?
Yeah, so as I mentioned, so Valley National Bank is a publicly traded bank, 62 billion in size, a local U.S. bank. And it is strange, what are they doing with my weird accent and my teams in general? And we, as I mentioned, we were merged into Valley Bank. In April 2022, there was a merger of Bank Leumi USA into Valley Bank. Now, the merger was due to all kinds of reasons. The Bank Leumi USA had a lot of very interesting things that were interesting for Valley. Tech was definitely one of them, and Israeli tech in particular. And the reason is, first of all, I was mentioning the diversification and how much it is important for a bank to have a lot of industries and to cover a lot of markets. So that's an additional market, tech and Israel. And that was something that was appealing for Valley. But it's not just that. Valley is also very active in investment through Valley Ventures. It has an innovation center. And having that access, that boots on the ground in Israel, also enabled Valley access to that cutting edge technology. So the way I see it, it's a win-win because for Valley, yeah, there is a diversification of the book. There's more business lines, although a smaller market. Of course, there is the bigger tech market that we are focusing on here in the U.S. And for Valley, there is that access to that cutting edge technology. For the clients, they first get specialized teams that are working with tech companies, Israeli tech companies, and understand that duality in the way that they are structured, that they are in Israel, but they raise money in the US, they are targeting their growth usually to the US. So this is one type of advantage for those teams. And if you think about it, Valley National Bank is the only U.S. publicly traded bank that has designated teams for Israel. There is no such thing. And secondly, those companies in relevant situation also get access to Valley Ventures and sometimes to innovation centers, to our innovation center. And I have several examples of companies that they're our clients and we're their clients. So that's obviously a win-win. I just want to add on top of that this collaboration and our ability to service the Israeli market in many ways is in partnership with Bank Leumi Israel, which is our biggest shareholder. So we work together both on the commercial side, but also on the investment side. There is a mutual investment through the Garage, which is an early stage VC that is a mutual investment for Valley Bank and Bank Leumi in Israel.
So I'm going to close the conversation on that note, but thank you so much for taking the time to speak with us and enjoy the conference.
Thank you so much for having me.